Bakkiyeselvi, Department of Commerce CA. Now let us discuss the topic of cost accounting. Cost accounting is a branch of accounting and has been developed due to limitation of financial accounting. Financial accounting is primarily concerned with recording, bookkeeping, directed towards the preparation of profit and loss account and balance sheet. The cost accounting is the accounting for cost aimed at providing cost data statement and a report for the purpose of managerial decision making. The different ways and the different elements of cost accounting. First one is the cost and then costing, cost accounting, the cost accountancy. The cost is the amount of resources given at the exchange of some goods and services. The resources given up are money and money's equivalent expressed in monetary units. And the next, cost accounting. The cost accounting is the concern with recording, classifying and summarizing the cost for a determination of cost of product or services, planning and controlling and reducing such cost and furnishing of information for management for decision making. Next one is the costing. The costing is the technique and the process of assignment of cost. And then cost accountancy. The cost accountancy is the rules and regulation of accounting principles is called cost accountancy. The cost accounting is the aim of systematic recording of expenses and analysis of the same as to ascertain the cost of each product, manufacturer or service rendered by an organization. The objectives of cost accountancy to analyze and classify all the expenditures with a reference to the cost of products and operations. And then next, to arrive the cost of production of every unit, job, operation, process, department or services and to develop the cost standard. And the next objective, to provide the data for the periodical profit and loss account and balance sheets for such intervals, examples, weekly, monthly or quarterly as may be decided by the management during the financial year. The next one, to record the relative production results of each unit of plant and machinery in use as the basis of examining and efficiency. What is the cost ascertainment? The cost ascertainment is the several parts. One is the collection of expenses and the analysis of expenses, measurement of production. The cost may be ascertained by the following ways. One is the activity-based costing and the unit costing, job costing, batch costing, contract costing and process costing, operation costing and composite costing, departmental costing. This is a waste of ascertainment of cost accountancy. The next one is the advantages of cost accountancy. The several purpose, one is the management and the public, government. There is a several purpose of advantages of cost accounting. First one is the management. The management uses of profitable and unprofitable activities are identified and steps can be taken to reduce unprofitable activities of jobs. The second one is that it enables the concern to measure the efficiency and then to improve it. And the next, employee. What is the uses of cost accountancy for employee? The cost accounting, introduction, incentives, wages schemes, bonus, plans, etc. Which brings the better reward to sincere and efficient workers. What is the uses of employees? The next one is that a good costing system is helpful to management to increasing the productivity and the profitability of the firms. This leads to prosperity of industries, better wage for workers and security for jobs. The next one is the creditor. What is the uses of creditor for a cost accountancy? Before the creditors accounting offer loans to the firm, they can have better understanding of the progress and profitability of the firm through the relevant reports and estimate the budget can project the future prospects of the firm. The next, government. What is the uses of government by cost accountancy? The proper system of cost accounting is the great uses in the preparation of rational plans, economic development, etc. And the next one is the public. The cost removes all the sorts of waste, leakages and other forms of inefficiencies with the result that the consumer get better quality of goods. Chapters rate. The limitations of cost accounting. Such a limitation, it is the expensive and then the system is more complex and the inapplicability for some costing methods and techniques. The not suitable for small scale units and the small scale businesses and the lack of accuracy. The last one is the lack of social accounting. That is the limitation of cost accounting. The accounting information, the financial accounting information, such two options. One is the external uses and the internal uses. The external uses is the security analysis and investors and then creditors and suppliers, government regularities and authorities, customers and competitors, researchers and the taxing authorities is the external uses. What is the internal uses? The owners, managers, employees or the internal use purpose of cost accounting. And the types of cost. The opportunity cost and the actual cost. What is the opportunity cost? The opportunity cost incurred for losing next best alternative is called opportunity cost. Then one is the actual cost. What is the actual? The actual amount paid to incurred or opposed to estimate cost or standard cost is called actual cost. The next one is the historical cost or the replacement cost. The historical cost is called the original cost. The actual cost incurred at the time asset was acquired is called historical cost. The next, replacement cost. The replacement cost, the entity would be replaced an existing asset at the current market price that may be not the market value of the asset is called a replacement cost. The next one is the explicit cost. What is the explicit cost? Salary paid to workers, rent paid, cash outflow statement is called explicit cost. What is the implicit cost? The owners of capital and then self-time investment is called implicit cost. There is a no cash inflow or outflow. Next, economic cost. What is the economic cost? The accounting cost plus implicit cost is added is called economic cost. Economic profit means revenue less than the economic cost is called economic profit. The next one is fixed cost or the variable cost. Fixed cost. What is the fixed cost? The cost is remain unchanged. The irrespective the output level of sales revenue such as the interest, rent, salaries is called fixed. Variable means is a variation of cost. Those costs vary depending on a company production volume. They rise as the production increase and fall as the production decreases. The cost is variations. It's called variable cost. Thank you.